Previously on Alex's vlog.
I have some laundry detergent with me, and of course after washing your laundry you have to use an iron board so that you can iron your stuff. So I carry this in my backpack at all times. As I said, I will be starting a challenge soon and I want to take a break during this weekend.
EMAs, candles, VWAP, numbers and letters.
Hello everyone, and thanks for joining me on this clip. As you probably know from the community page, I managed to pass the My Forex Funds challenge, the one that I started yesterday. And this video will be mostly a clip where I walk you through my trades, and also I will have to add an important amendment to the gold strategy, the one from the previous videos. By the way, that's the one that I use. Do you hear that music as well? This can only mean one thing. Training montage. Okay, now that that's out of the way, let's go to serious business. By the way, don't take any of those trades that you saw during the montage to heart, because that was just me having fun. I did write this, yeah. Okay, so moving on to the main event of this clip. So me passing the My Forex Funds challenge. Again, I have to say that I'm not that excited, mostly because I know that this is only a small step and it really doesn't mean anything provided I don't pass the verification. But that's a topic for another time. What I wanted to say, I actually wanted to do an update at the course with this extra bit of entry on this strategy. By the way, if you don't know what the strategy is, the video should look something like this. So you can check it on the channel. And as you probably know, we just rely on pullbacks onto the EMAs to enter a trade if the stochastic RSI is correct. But what I noticed during backtesting was the fact that when price was ascending like this, basically this is an ascending channel, and you probably know, if not, you will learn now, that most of the times, let's say 75% or 80% of the times, random percentage, but anyway, most of the times, these tend to break to the downside. And the same, of course, applies to the opposite. So if you have a descending one, it is poised to break to the upside. Now, what I was seeing this in the market, and I was frustrated that I couldn't really take these entries, mostly because my EMAs were, let me draw it with another color. So let's say my EMAs were, in this case, something in the lines of this. And I just had an entry here, but I didn't want to take that entry, mostly because we are so far along this ascending channel and I was expecting it to break to the downside at any moment. So this is where I found out that you can implement a neat way besides the pullback into the EMAs to spot these channels and to actually take some nice moves at the end of the channel or close to the middle of it. And you can do that by using divergence. So let's say, this is a clear example right here, but I will show you on the real market as well. As you probably know, if the price ascends, if the price makes higher highs, but the indicators make lower highs, stochastic RSI in our case, because that's what our strategy uses, basically that's a bullish divergence, or it sometimes marks reversal. Well, in these cases, I saw that you can increase your win rate just by taking trades on top of the channels if you identify the channels correctly and you spot a divergence, mostly because of the fact that I told you earlier. Of course, you may have fake outs, but when you catch these moves, they are awesome, and you will see some trades that I took which respected this principle exactly. So again, learn to identify the channels, be them ascending or descending, and if you manage to spot divergences at any of the tops, you just, after a nice confirmation candle in your direction, basically enter a trade. Stop loss, I chose for this 1 ATR or 1.5 ATR. That's basically up to you. I didn't really mingle with that too much, mostly because your position will end up looking something like this. So let's say you enter a sell here. Your stop loss shouldn't be higher than the previous high, but you don't have to go any further, because in case of the in the unfortunate case when the channel is a fake out, so this isn't a break and price keeps going up and retesting the top of the channel, you will be obliterated in so many ways here. So no need in keeping that stop loss big, and it's better to conserve your risk to reward ratio, because as I said, if you missed it or if you missed call it, you will get stopped out anyhow. Okay, now this being covered, let's go and see the trades that I took. Okay, so let's cover the first trade, which is this one. So as you can see, after this impulse to the upside, price started to make an ascending channel right here. It was a narrow one first, but then it got wider. And this is the perfect example of what I was saying earlier. Let's take a look at the top. So first of all, you can see that this is a higher high than this one, right? You can see that on the stochastic RSI, the high is lower, but you couldn't have entered this trade mostly because you didn't know that this channel will be confirmed. So you basically didn't have a channel up until this push right here. That's my point. You push all the way to the downside, then you create a new high. Then this is a higher high previous compared to the previous one. By the way, this high is higher compared to this one. So you have this one, higher high, then boom, higher high, but lower on the stochastic RSI. And I saw this nice impulsive candle and decided to take a short here. I risked 1% on this trade, mostly because I was eager to trade. And it seemed like a nice runner. But when I saw that this candle, this rejection candle, I wanted to see what happened with it and what's the reason behind it. So this would have been real market conditions right here. You see this candle, you are in a sell. You see some strong rejection right here. And if you check to the left, you can see that this is quite an important level to be at. And given this fact, I just used my fib tool and I drew, I basically drew a fib from here to here. As you can see, this is the 0. And I saw that this is precisely the 618 retracement, which confluences with this area. So I decided to cut my position as it is, somewhere around this point. And this is the interesting thing. After I did this, I almost immediately entered the buy, mostly because of this rejection. So this was no strategy, it was only price action, guys. And the plan for this buy was as following. I wanted to look for a sell once we pull back into the EMAs right here, somewhere around this area. And if it were for a sell position, I would just close my buy and enter a sell position at a discounted rate using the strategy that we use, the gold one, pulling back into DMAs and then shooting back down once the stochastic RSI is where it is. So I was waiting for this, but then the position shot up basically. It retested this level and created this nice ascending channel, which I trailed all the way to this impulse. And after I saw this impulse getting broken as well, I basically set my stop loss below this trend line, which is a trend line that goes way back on higher time frame. And yeah, gold reversed, and it took me for a nice. This was a 3-to-1 trade because the stop loss was quite wide. I took this wide stop loss mostly because of this channel. I was not sure if it were completed. Mostly because, as you can see, not really much of a divergence right here. So I was expecting it to make, I mean, in worst case scenario, it would have made 2 pushes. If it made 1 push, my stop loss would have held. But anyway, this was this trade. And right now, again, guys, after this is an awesome trade. So market pushes down, goes through the VWAP, goes through all the EMAs, and then we have a small impulse to the upside, some buying pressure right here, but then this position, this pressure started to fizzle out, as you can see. And again, guys, what do we have here? Check out this line and also check out this line, and now check these 2 ones out, and you can see that we have a reversal divergence here, which is on top of this channel, basically starts from the top of it, and added the fact that we have VWAP, all the EMAs, and I'm pretty sure there's a 618 fib lying around there. Yeah, perfect. So there's nothing much more to ask in terms of confluences for this trade. Mostly that's why I posted in the community that it was an awesome day to trade gold. So you just had really nice setups. So I entered this trade based mostly on the fib, because as you can see, I didn't wait for this candle to close. So again, let me put that fib out. So I basically concluded that price didn't make a higher high. I took a risk here. It was aligned with the fib, and it was aligned with this mini liquidity zone right here. And as you can see, this position had close to no drawdown, so I rode it all the way to the downside. I stopped it here mostly because this was my take profit to pass the challenge. So this was a position that rendered me 4%. This one rendered me 1.5% roughly, so 5.5. And this is the one with 1% risk. So that would be 9.5% minus commissions, and I also lost the trade on US30. Actually, let me show you that trade first. Okay, so this is the trade on US30 that I told you that I lost. So again, I was risking 1% right here, and as you can see, the market pulled back into the EMAs. And I was waiting for a cross on the stochastic RSI, which happened right here. But I didn't really like these candles, but I certainly like this one. So I entered the buy right here based on this impulse and retest on this previous level of structure. But unfortunately, I was taken out. I was barely taken out. Not barely, but I was taken out. And then market went full blown in my direction. So nothing much to say here. It's a minus 1%. This is a trade that I just marked last night. It didn't quite go according to forecast, but I nailed it up to some point, but that's unrelated. So yeah, these are my trades. Again, guys, if you want the strategy, you can find it somewhere around the channel. It looks like this. be sure to backtest it yourself, and if you want to implement the channel thing, it's awesome because it renders results, mostly because using the pullback strategy that we use with the EMAs, you rarely have entries when channels are broken, and as you probably know, the longer the channel, the bigger the impulse, so you risk losing huge trades just by sticking to a rigid strategy. So play around with things. As you saw, I pull out fibs, I pull out channels, I mark liquidity zones. Do this as well. Check for divergences in channels because this will help you. So this is, if you want to have a takeaway from this clip, and if you're still watching, by the way, if you do, you're awesome. So if you want to have a takeaway from this clip, basically don't stick to a rigid strategy that someone posted on YouTube, be it me or someone else, because it won't necessarily work for you in the long term. Try to blend it with what you find comfortable spotting in the markets. For me, it's channels, so I feel comfortable with spotting channels in the market, and I kind of like to anticipate their behavior, and having a divergence helps me, so I found that out. I'm sharing that with you. But again, this doesn't mean that it has to be your truth as well. So play around, do some backtesting. Yeah, and by the way, I just rambling. I received lots of questions regarding this strategy. Many people are just asking, man, is this strategy a sure thing? Can I bank 10% on a weekly basis? Can I pass the FTMO? Does it have a win rate of above 70%, or does it have a risk to reward ratio of 1 to 3 or above? And my answer is I really can't tell you that, mostly because first of all, it's your money and you're trading with it. I don't want to be the guy telling you, yeah, this is a sure thing, use it because you will generate awesome amount of income. No, you won't. You have to do your own backtesting. You have to find your own niche in the market. You have to find your own entries and maybe blend it with something that I show you so that you can create your own strategy and not just take one. By the way, guys, there's no plug and play strategies, or if there are, they will not render consistent results. So back that in, because that's an absolute truth. So don't check clips on YouTube with a 5-to-1 reward to risk ratio with a 70% win rate and just take them as they are with your money in the markets, because you will fail. And the only reason that you will fail isn't that guy who is posting the strategy, but is you, because you didn't even filter it even a bit to make it yours. So as a conclusion, I don't know, I rambled way too much, but as a conclusion, if you love the strategy, again, looks like this. If you have any suggestions, post them in the comments. Let me know what you think about the divergence entries in the channels, and don't be fooled by thinking that you can take this strategy and apply it in the real market and it being a sure thing, because it most likely won't if you don't make it a bit yours and adapt it to your trading style. Okay, thanks for watching. See you in my next video. I will document the verification, but I have to wait 4 days for that because I passed it in 1 day because I'm awesome. I'm kidding, but anyway, nobody's watching up to now. So yeah, anyway, guys, see you in our next clip. Have a nice weekend. Happy Easter for all our Orthodox people out there. And yeah, bye-bye.